Welcome to lesson 2. We're going to be talking about a few things here. We're going to be talking about candlesticks, the different types you can get, a little bit on charts and trading platforms, symbols to trade, and trading times from around the world. First of all, we're going to be talking about candles. You'll be able to see on the left hand side two charts here. I've got bar charts, and on the right hand side of the screen I've got candlesticks. You also get another choice of line charts. I believe they are completely useless for our style of trading, so I do not go near them. But your next choice to make is whether to use bar charts or candlesticks. Now my preference is always going to be candlesticks. I learned candlesticks from Steve Nisson, and I believe they're a lot clearer, and you get more trading opportunities than you do on bar charts. My preference would also be that if I was standing 5 meters back from my computer screen, candlesticks are a lot more descriptive as a visual than the actual bar charts themselves, because they've got fuller bodies. As you can see here, when a candle opens and it drops down, it's got a full coloured body, which is very descriptive. On bar charts, as you see, when the candle opens, leaves this little indentation on the left hand side. When the candle closes, leaves a little indentation on the right hand side. Now, I prefer descriptive. I'll change this over to bar charts, which you can do over up the top tabs here, which is very easy to switch. And as you can see, those bar charts just very descriptive now, and a lot clearer to see. That's why I always use candlesticks in my trading. I advise that you do the same, and like I said just earlier, you can get a few more trading opportunities utilising candlesticks than you can over bar charts, just over the actual formations that they produce. Okay, and so I also recommend that you have a little look at Steve Nisson's Profit in Forex candlestick course. It's very educational, and you can learn an awful lot from it. But that's his responsibility to do that. Steve Nisson brought the candlesticks over to the Western world. He's famous for it, and anything that anybody teaches about candlesticks, they've actually learnt from Stephen Nisson. So you're better off going to the guy that brought it over here. His life is all through candlesticks. He's studied for years and years. He's been over to Japan, actually learning all these techniques from the Japanese himself. Okay, so that's it for charting. It's very easy to select, and it's down to yourself what you feel comfortable with, but give the candlesticks a try. Next thing we're going to be talking about is charts. So this is a chart. This is an individual chart. Most charts will look the same. You get different options depending on your brokers, which brokers you choose, on which indicators. These are very standard indicators. Now your broker will give you different options on some of these. Some might be a little bit more advanced than others. Some of the tools that you get vary from broker to broker. Most will come with Fibonacci retracements. Some you can modify a little bit more than others. Some you won't be able to modify at all. I like to add levels in, as you can probably see here in the Fibonacci. There's a level in here, 78.6. A lot of brokers don't add this, but I advise you to add it because it's still a very significant number to add to Fibonacci's. But I've traded with the brokers who don't give you the options of adding new levels. All the basics, equidistant channels. But what I recommend you do is you try out a new broker. If you're looking for new brokers, try them out for a demo for 1 week to 1 month. Familiarise yourself with the tools that you use to trade, and you can always find a better broker. Always be looking for ones. I like one-click execution. which means all I need to do is hit this button here and that'll automatically bring me into the market, as opposed to most brokers hit the new order window, hit the buy or sell, confirm. That's 3 clicks before I'm actually in the market, and you can actually lose a few pips before you're actually on the market. So I like 1-click execution at the price that I want. Okay, another benefit would be when you're actually in the trade, what you can do is you can actually drag and drop your trade levels, whether it be in your stop losses and your take profits. You can just click, drag, drop, as opposed to punching in numbers manually. But different brokers offer different services, very minute details of differences, but yeah, try them out. I like Interbank. They've got one of the most advanced MetaTrader 4 platforms out there. I like to trade with them. So okay, so another thing to talk about would be symbols. Where do we get our symbols from? Right here. I mean, this is just a demo chart just now. These are most of your majors, all of your majors actually. Euro, US dollar, United States dollar, Japanese yen, Great British pound, US dollar, Swiss franc, US dollar, Canadian dollar, and Australian dollar versus United States dollar. Okay, they are your majors. You also get minors and cross pairs. You do get a lot more than this. These cross pairs, I don't go anywhere near them because they're a little bit too volatile for me. When you're starting off, I want you to stick to the majors. You will notice that as well, they're all priced against the US dollar. Either way, either the base currency or the opposing currency is the base currency, but either way they're all priced in or utilising the US dollar. This is because the US dollar is the world's reserve currency. Everything is, all your commodities are priced in US dollars, gold, silver, oil. So this is why the majors are against the US dollar. One thing to note is if you have too many trades against the US dollar and something changes, your exposure is a little bit too much. Let's just say you're buying the British pound, you're buying the euro, and you're selling the Japanese US dollar, Japanese yen, and you're buying the Oz US dollar. Now that would mean if the United States dollar was to change on a particular way, you've got a little bit too much exposure against that one individual currency. So I tend to only trade 2 trades on different currencies at any one time, just in case anything dramatic happens, whether it would be a big news release that I never caught up on, but the last thing you want to do is getting caught out or with 4 or 6 trades and they all start tanking it in a different direction. Okay, so I'm going to talk about some trading times. Obviously Forex markets is from all around the world. This is a little picture I got off the internet just for a little brief description about it. So when the world market opens, first of all starting in Sydney and Tokyo, they open up 8 o'clock in their time of the world. We'll still be in our beds by this point, depending on where you do stay in the world. If you stay in America, then yeah, it's going to be very, very early in the morning for you. I trade in the London time, so it's still 2 o'clock in the morning for me by the time they start trading. As time goes on, Europe starts to wake up about 8 o'clock in the morning GMT. Frankfurt, London, 8 o'clock in the morning, and we get this little 2 hour overlapping time here, which is creates high volume. This is one of the best times in the whole day to trade during the London European session. right at the tail end of the Asian session. Now, as we progress through into lunchtime for the European markets, you do get a little bit less volatility, and then things start to open up, and then you get a 4-hour overlapping period of the London European sessions, as well as the New York and the whole of America trading sessions. So this is a great time to trade as well. If you're from America, this is why you want to trade. Start looking at exiting trades after the London session has finished. So as you can see, if you stay over in the West Coast here, you might only get a couple hours of ample opportunity when you wake up in the morning. But yeah, so London New York overlap is 4 hours, and the London Tokyo overlap is 2 hours. This is the time you get the most traders actually in the market. You get the highest volatility and the biggest moves. So it's good if you stay in London or Europe, getting up early in the morning, 7 o'clock, start trading your charts. That's when you'll find some of the best moves. I'm not saying it doesn't move throughout the rest of the world, but yeah, this little window of opportunity right here, that's definitely a good time to get in. So over in the Tokyo session, you're actually trading with most of Asia here, and not to forget Australia down here as well. So that's still a high volume opportunity. But when you're taking in consideration, when you're adding in Europe to Asia and to Australia, it's a very high trading volumes right there. Okay, so just a little quick video there for you, just to get some of the basics out of the way. Trade with candlesticks. That's my preference, not over bar charts. And trading times, trading nice and early from 7 o'clock up until the tail end of New York open as well. There's plenty of opportunities for trading there for you. While we're talking about trading times, I've got my trading rota on the website for you. That's free to download and utilise, because it's always best that you mark down your trading opportunities and the best times, just so you're not sitting at the charts for 15 to 18 hours a day trying to catch some moves. Limit your trading down. I like to trade off 4-hour charts. One, because they are very stable, and second of all, I don't want to be at the charts on the hour every hour. Sometimes I'm busy, sometimes you miss them out. You do get very reliable moves on the 4-hour charts, and I only trade at 12 o'clock, 4 o'clock and 8 o'clock. That's 3 trading opportunities throughout the day for me, and that works for me in all walks of life. It makes me, I know it's only 5 minutes at the top, but sometimes I'm a busy man in other aspects of life. I don't want to be sitting at the charts, so 4-hour charts work for me. If you're just sitting about, nothing else to do, I recommend the 1-hour charts. That's what most institutions use to trade off. You'll get one possible opportunity every hour for a candle formation or trend line break, but that's all down to your trading decisions. When you figure that out, put it into the trading rota that you can get from our website, and once you make your plan, kind of stick to it. So don't start opening up the charts at 1 o'clock in the morning trying to get trading opportunities. Just stick to your trading times, and things will work out a lot better for you. So thanks for watching this video, and we'll catch you in the next one. Thank you.